The same pattern that brought down Bitcoin at the end of last year has now appeared in the S&P 500. And I'm going to show in today's video why the internals of the stock market are also pointing towards a top in equities, and how, combined with the failure of the Japanese yen last week to sell off after the Japanese elections, this points to significant risk off coming into Forex markets as early as next week. For those of you watching the video for the first time, my name is John Fortune. I've been trading financial markets for over 18 years. And if you want to follow along with the exact setups we're going to be looking at in today's video, you can download the free strategy guide in the pinned comment or the description below. And in there you will find the 6 setups that have generated our members over 400% returns. So a quick breakdown of what we're going to be looking at in today's video. We're going to look at the DXY followed by the USD pairs. And as you'll see, because the DXY is in a range, there are opportunities to both buy or sell the dollar next week, which we're going to be looking at in today's video. Then we're going to look at Bitcoin and Ethereum, which look set for the next legs down. And then we're going to move on to the portfolio selection and the quantitative analytics to find some of the best setups in Forex heading into next week, which are outside of the US dollar pairs. And then we're going to finish off the video by looking at the commodities, gold, silver, and crude oil. As always, everything is timestamped in the description and in the pinned comment below for you. Don't forget, guys, if you find these videos helpful or if you think they provide you with any value at all, be sure to like, share, and especially to subscribe to the channel. It really helps when you do that. And as always, I want to say a big thank you to everybody who has subscribed to the channel so far. So looking at the multi-charts for DXY, you can see we're still stuck in this monthly range between the 100.25 and the 96.37. And the whole time the US dollar is stuck in this range, it can move up, it can move down, but it's unlikely to find significant direction until it starts to break either one way or the other. Now, what that means is we can trade the US dollar on a ranging basis. So if we get some dollar strength, we can kind of sell into it. And if we get some dollar weakness, we can buy into it. So heading into next week, you can see we fell just short of the technical target of this ascending triangle we were looking at previously. And we're now coiling in the 4-hour time frame. So, you know, this could break out to the upside and achieve the target, or it could come down and test the 96.37. Going into next week, I'm not looking to be predictive when it comes to the US dollar. I'm looking to be reactive. So we're going to be looking at setups in the dollar pairs, which we can trade to the long side or the short side, depending on whether we get some strength or weakness coming into the DXY next week. So if we jump over to the US dollar in the Hedge Dash platform, you can see that the buy zone starts at the 1.17748. What I like about this is also the bottom of this kind of correction where it looks like it's an A, B, we come down and we hit for a C. So this is where I'm going to be looking at heading into next week, the 1.17673. So again, for those of you who have got the free strategy guide, you'll know we're in the buy zone down here. The odds based on the volatility of this asset of bouncing or pausing or reversing higher are significantly increased once we pass the 1.17748. And then if we add in a key area of support, in this case type 1 support, because it pushed price up in the past, which is what we're looking for it to do in the future, then this is where we get that confluence. And there is a high degree of probability that if we trade below the 1.1767 next week, we start to fail and we bounce back inside, the moving average comes over, and this becomes a range play. So again, the setups are starting to reflect what we're seeing in the dollar, which is the dollar's ranging, and therefore the opportunities we're starting to get in the dollar pairs are range play opportunities. So that's what I'm going to be looking for next week in euro dollar for 1 or 2 days to the upside. It's that range reversal setup. And if we have a quick look at the multi-charts, you can see there's not too much going on. Again, it's kind of ranging. We failed to break through the high of the 1.19180 on a weekly basis. We came back and tested it. And this was actually the weekly upper bound last week, right here. If you watched last week's video, if you did watch it, this was where I was looking for a potential short last week with members. Came up. If you held on to that, you would have had to have taken it through non-farm payrolls. We did get the sell-off on non-farm payrolls. So if you did hold that, you would have been taking that risk on. But coming into this week, you can see basically what's happened so far is we had this descending triangle. The pattern target is down here. We pulled back, we had this kind of double bottom, and we've retested the underside of not just this high over here, but also the descending triangle. So I am looking for this to come down. I don't know if it will come all the way to target next week, but it's this low right here that I'm going to be looking for at least a 1 or 2 day bounce to the upside in euro dollar next week. Next is pound dollar. Now pound dollar is setting up whereby we could trade this to the long side or the short side. Going into next week, as you'll see when we get to the portfolio selection part of this video, the pound is actually one of the currencies I like to the short side as a theme next week. So what we have here is we have a key area of resistance, which sits right at the sell zone next week. And we have a key area of support, both type 1, which sits at the buy zone. Now, the reason why we can look at this as the buy zone and the sell zone is because it's ranging. It's a ranging market. And you can see the moving average is starting to break below it, and the moving average is starting to center around price. So if pound dollar comes down and takes out the 1.3510, which is this key area of support in the buy zone, I will be looking for a potential bounce for 1 or 2 days to the upside, back towards the moving average. But also, equally, and this is very similar to the euro dollar setup. If you remember, we just looked at, it broke through the high, failed, and last week it retested the high and sold off. So if we do get a push into the key area of resistance over here, which is kind of like a left shoulder at the 1.37887, I will also consider a potential short back towards the moving average for 1 or 2 days. Again, because it's a ranging market, selling resistance and buying support is a good policy. If you have a trending market, then of course, if it's trending to the upside, buying support is a good policy. Selling resistance is not a good policy in an uptrend. And in a downtrend, selling resistance is a good policy. Buying support is not a good policy. But in a flat market, you can buy support and you can sell resistance. So that's what I'll be looking for next week in pound dollar. If we have a quick look at the multi-charts, because I do like this, I've put the weekly lower bound here, this blue line where the buy zone starts at the 1.3550. So below there, we become oversold during the week. So that's the first thing I'm looking for, because as soon as the market turns oversold during the week, regardless of anything else that's happening, we have a very good chance of bouncing. So as soon as that happens, you can see down here, we actually have some nice confluence of the prior low, and we have this big upward sloping channel in the daily time horizon. And all of this converges between the 1.3550 and the 1.35, I might have to take this off so I can read it, the 1.35087. So if you want this kind of zone or area right here next week, and you can see we failed to actually break this inverse head and shoulders. So I would not be surprised to see this coming down into the area between the 1.3550 and the 1.35087. I do think next week this is going to be a great place to look for a 1 or 2 day bounce to the upside in pound dollar. Next is US dollar Japanese yen. Now this is where I think you really need to pay attention next week, because in last week's video we highlighted this major technical pattern to the downside in the Japanese yen, and we had the Japanese elections. And what happened was, on the Japanese elections, even though the outcome was bearish for the yen, it was already priced in. So because we had this big run up, what happened was we actually ended up seeing the reverse, whereby the Takachi government cleared a massive majority, but the odds, as we looked at in last week's video, of it doing so were, over 90%. So the market expected it, and then the market pulled its position, kind of bought the rumor, sold the news kind of thing. And as a result, there was no follow through to the upside. Now, of course, before the elections, we don't know whether the elections are going to drive, US dollar yen higher, or if we're going to see this kind of reversal. But the fact we saw that reversal now heading into next week means that we are possibly going to get a massive move to the upside in the yen. Why do I say that? Because last week we looked at a significant bearish technical pattern, and the pattern didn't break. Instead, it looks to be reversing. And if you have a market which is at the point of a major technical breakdown and it doesn't happen, very often you get a major reversal in the other direction. So going into next week, I'm only looking to be a seller of US dollar yen. I'm not looking to buy this market, because with the sell-off last week, it now looks like we are setting up a potential third wave to the downside. We had this kind of, and we'll look at this in more detail on the multi-charts, but we had this kind of rectangle pattern. It held the lows, and this is the pattern where if we broke through, it was a significant pattern to the upside in US dollar yen, downside in the Japanese yen itself. But the fact we failed, and now we're coming down towards the low point of that pattern. Again, we'll look at this in more detail in a second in the multi-charts. But the break below here would technically kickstart a third wave to the downside. Third waves are the most explosive, the most impulsive, and this would be significant risk off in terms of Forex, because the Japanese yen is the most risk off currency. So before we head over to the multi-charts, this is the low, and there's multiple lows here that I like heading into next week. It is actually a stair step. So we came down, it pushed price higher in the past. If we can pull back and test the 154.69, which sits right at the sell zone, this is where I'm going to be looking for a potential short opportunity in US dollar yen. And if I can time that, I will be potentially looking to hold on to this for longer than 1 or 2 days and to see if we can get that fundamental break down below the lows. Because if you do, and it is a third wave, which is what it's starting to look like, then you should get strong momentum on the break and it should kind of clear it pretty much without looking back. So if we jump over to the multi-charts quickly, this is the weekly pattern we had setting up to the upside in the US dollar Japanese yen market. And we held the low last week and we rallied, and then we had the elections. And after the election result, look at this down week. Huge down week, and now we're sitting right at the low over here, which would kickstart a third wave to the downside. And then we have this gap. I mean, this would be the first port of call in my opinion, the 147.82. And you can also see how we came down, we tested this kind of descending triangle top over here. We tested it, and when you get this bounce, stop losses get placed here. This is exactly the same thing we saw in Bitcoin before we had that liquidation. So if I pull up the Bitcoin chart here, you can see this is what I'm talking about. We had the break out of this pattern. We came back and tested it. And this was where I said in the weekly Forex forecast video, if we break this low, look for momentum to come in and a liquidation, because this is where stop losses have been placed, because we tested the pattern boundary. We got a bounce as buying came in, and stop loss is going to be placed there. And when they get taken out, look at the liquidation you get. So this is exactly what we're seeing in US dollar yen now. We came down, tested the pattern boundary and attempted to bounce. And notice in the monthly time horizon, it's an engulfing monthly candle. And the break of this is the break of the monthly low. So I do think if we break the 152.09, which looks highly likely now, this is going to kickstart, and you're probably going to see strong liquidation through this low as stop losses get taken out, but it's going to kickstart a third wave in the Japanese yen. So we do not want to be on the wrong side of that. Now we had that kind of failed bearish pattern in the Japanese yen last week. And so finally, just for reference here, this is the technical pattern we had. It's the same pattern which caused Bitcoin and Ethereum to collapse. And last week, instead of taking out the pattern low, we had this reversal week. So this becomes the area where that major pattern to the downside. And again, if you've got a significant pattern like this and it breaks, you get a very strong liquidation. But if it fails, you also get a very strong liquidation, but it tends to be in the opposite direction. So keep an eye on the Japanese yen. I think it's going to be something that you definitely don't want to be on the wrong side of next week. And if you can time a nice entry before the breakout, you could get paid very handsomely in the Japanese yen next week. So before we move on with the US dollar pairs, let me just add some context for this risk off as well. If we're going to see the Japanese yen start to appreciate significantly, this should be risk off in general, and we should be seeing kind of risk off conditions coming into markets. Look at how in the S&P 500, we're forming this broadening top pattern, which caused Bitcoin to top out at the end of last year. And of course, we saw that big sell-off. And we also have not just the S&P 500 itself pointing us with this pattern towards a potential near-term top, but we also have the internals of the stock market of the S&P 500 pointing towards a near-term top. Why? Well, if we jump back over to HedgeDash, you can see when I flashed that graphic earlier in the video, the 3 sectors which tend to predict a top in the S&P 500 when they start to outperform are energy, materials, and consumer staples. And look at the top 3 sectors in terms of rotation that we currently have in the S&P 500. So when you combine the internals of the stock market with the technical pattern of the stock market itself, and then you add in the most risk-off Forex currency starting a potential breakout to the upside as a third wave, all of this points a very bleak picture in terms of risk-off for markets. And heading into next week, we really want to make sure we're not on the wrong side of any big risk-off moves. But also, I want to primarily focus on risk-off setups. There are a couple of risk-on setups I'll be looking at, specifically in the Aussie dollar, but everything else I would specifically look for risk-off setups as a preference. And just quickly before we move on, many of you who are using HedgeDash will notice we've added in semiconductors, metals, and a couple of other things. And we also now have over 500 stocks which cover all of the stocks in the S&P 500 benchmark, and we're looking to add even more this year. Next is US dollar CAD. Now, one of the caveats to initial risk off moves is that the dollar, if you do get a sell-off in stocks, it tends to actually sell off initially because people are dumping stocks. And then it starts to rally if you get a really severe sell-off. I don't think we're looking at a really severe sell-off because we're at all-time highs in stocks, and severe sell-offs or crashes tend to come after sustained kind of bear markets. So I don't think in terms of risk off, we're likely to see a flight to safety in the dollar. So that is a caveat because I am still interested in potentially shorting the US dollar next week, even though I am looking, especially with the yen pairs, for some of those risk off moves preferably. Now, US dollar CAD, there's no need to jump to the multi-charts. This is a very straightforward one. We have the buy zone and the sell zone at an area where we have a really nice key area of resistance and a really nice key area of support. Based on the performance metrics, I would favor a short from the sell zone above the 1.3724. But if we do end up trading down below the lows, I might consider a long opportunity. But for the sake of just keeping it simple, heading into next week, and it's an if-then process, especially with the dollar, because it's ranging, it's more difficult to know, which way it's going to go. So if we get a push higher, then I'm going to be looking for a failed breakout in the sell zone at the 1.3724 and a move back towards this kind of range reversal play, back towards the moving average. Next is US dollar Swiss franc. Now, this is a short or do nothing for me. I cannot buy this market under any circumstances next week. The sell zone starts at the 77628. And if we jump over to the multi-charts, I've overlaid the sell zone right here with this blue dotted line. The thing I want to point out here is, yes, we're breaking out, or we've broken out of the descending triangle pattern. We're making our way towards the 0.75730. So any pullback and short from the sell zone next week is something you could likely hold on to, not just for the prior low if you want to swing trade it, but also for the pattern target, the 0.75730. But what's really interesting here is you can see the sell zone next week sits right at the 20 period moving average in the daily time horizon here. So we've got that kind of dynamic resistance, plus we have prior 4-hour highs up here. So this is where I'm going to be looking for a short. I will be looking for, first and foremost, 1 or 2 days down. But if you want to look for a potential swing trade, of course, your risk of taking a loss goes up the longer you hold it. But if you are looking for a potential swing trade, that would be a potential timing area to look for the prior lows, or if you really wanted to go for the longer term target of the 0.75730, you could also look for that as well. Depends on how you trade, but my mandate, especially with the real-time setups and members, is going to be for 1 or 2 days for this kind of rip and flip setup, because it's a trending market to the downside. Next is Aussie dollar. Now, Aussie dollar is still a buy or do nothing. Quantitatively, this is a market that I can only be long. I cannot short this. And if I zoom out here for you, you can see the only real key area of support in the buy zone is the prior high over here. We've already broken it, pulled back and tested it. So what I will be looking for next week is if we can come back down and trade into the buy zone, which starts at the 0.69781, and stair step and retest just like we did here and bounce, just like we did here and bounced. If we can retest the 0.69420, I will be looking again for a 1 or 2 day bounce to the upside in Aussie dollar. This is a market I can only be long or do nothing, but it does need to pause for a couple of weeks. Whether that starts next week or the week after is hard to say, but it does need to pause probably sometime soon for a couple of weeks. But it's so strong that if it does pull back and stair step this, there should at least be a 1 or 2 day upside bounce next week from the key area of prior broken resistance turning support, the 0.69420. And the final dollar pair before we move on to Bitcoin and Ethereum is New Zealand dollar. This also needs to pause and correct on a rolling weekly basis, which basically means just like over here, once we get extended like this, it has to pause. It can go for 1 week and then extend again and then kind of pause, but it does need to neutralize. And if it's on a weekly basis, it needs to do that for at least 1 week, if not a couple of weeks. So on that basis, I am prepared to potentially trade New Zealand dollar both ways. It is strong, but it's getting weaker. It's kind of going back to neutral. So the primary setup I'll be looking for is this. If we can pull down into the buy zone and test the prior low, again, this kind of A, B, C setup, the 0.5929 is the key area of support. I will be looking for a failed breakout and a potential reversal for 1 or 2 days to the downside. the upside here, and this would turn into, so if it pushes to the downside, I'll be looking for a buy opportunity to the upside. And as it does that, it would necessarily crisscross over its moving average and become a range reversal play. Now, if we just extend higher and push through here, although I would prefer to look for the buy, I would also consider a short because we've got this really key area of resistance over here. And what that means is, especially if we extend into this, let's say I short it here. If it goes straight through, there's a very good chance that it pulls back and retests, and that becomes the break-even trade. So what we're doing in real time with members throughout the week is very often we're just trying to position ourselves into opportunities where we can either win or be break-even. And sometimes we'll take quite a few break-even trades because we're positioned into something, it doesn't go straight away, we scratch the position. So this is the kind of area, and very often you do that by timing from key areas of support and resistance, that confluence level. This is what I'll be looking for next week, and ideally, you know, it would fail back towards the moving average. So this is what I'm looking for next week, but if we breach the 0.61254, especially if we do it almost kind of straight up, I will also potentially consider this as a ranging opportunity. So shorting the top of the range or buying the bottom of the range. So this is my preference, but I will consider this if it happens next week. Okay, so moving on to Bitcoin and Ethereum, starting with Bitcoin. Now, what's interesting about Bitcoin is if you look at this last month, we had this kind of outside engulfing month. Very, very hard the following month to actually reverse that and end up, you know, trading higher. It's possible, but it's unlikely. And what all of this is pointing towards is further downside, at least to the prior lows, if not further. Now, because we've had the big extension, we've started to put a new high in over here. What this allows us to do is to add a channel or a trend line here. So as you can see, this is the broadening top pattern, which caused Bitcoin to collapse. And we've just started to see materialize in the S&P 500. And we have the internals of the S&P 500 pointing towards a potential top. Well, any kind of risk off coming into equities is going to lead to continued sell-off in crypto. So everything is painting a picture of further downside, you know, next week or even in subsequent weeks in Bitcoin and Ethereum. But if I zoom in a little bit here on the daily, you can see what we're basically doing is we're just pulling back this big sell-off towards the moving average, and in the 4-hour time frame, we're forming this channel. So what I would be looking for is, of course, if it comes back and tests the moving average, you could look for a potential, you know, sell the rip. But with crypto, you know, you're definitely better off getting involved in breakouts or applying breakout strategies than kind of mean reversion. So what I would personally be looking for in Bitcoin is, you know, the moving average comes up, a break down below the channel low first, and the 4-hour moving average will do this. And then you can look for that bear flag set up into the lows, and, you know, breakout strategies tend to trail stops below moving averages or above moving averages, etc. So that's what I'd be looking for. We do have a key area of support down here in the monthly at the 49.11. I don't think it's going to do that next week, but certainly, you know, any kind of breakout down to the prior low is probably the best kind of setup you could look for in Bitcoin next week. Next is Ethereum. Now in Ethereum, we actually have this pattern target at the 1581 sitting right at the prior low, or a key area of support, actually not quite at the prior low, a key area of support over here at the 153. So the 1530 and the 1580, this area here, it does look like Ethereum is going to come down, test this. It's forming now a daily bear flag. And what's interesting here is the top of the channel up here actually coincides with the daily moving average. So you could look for that potential short, you know, in this area, but again, because it's so volatile, you know, any kind of short at resistance is kind of like a mean reversion. You know, you're kind of selling the rip or buying the dip if you do that. In this case, selling the rip. So again, breakout strategies tend to work better in crypto markets because they're so fast moving. I would, if you want to be safer and you don't want to be on the wrong side of a big whip higher, you know, maybe this crosses the moving average and comes back and retests this. So if you sell into strength in a kind of, you know, market like this, you can be on the wrong side of a bigger move. So if you want to be on the safer side of this, you know, volatile market, apply breakout strategy, that would be a break below the prior low and below the channel. And then you look for that kind of bear flag and the move down. In this case, I mean, you know, certainly the prior low, but The 1581 is not that far down. I do think we're coming down to the 1581, which is the symmetrical triangle target from back here, which we had highlighted all the way back here. Had exactly the same thing as we saw in Bitcoin happen in Ethereum, whereby we broke above the kind of pattern high. Do you remember this over here? We broke above the pattern high, and you can see in the daily chart, we tested the boundary, or around the boundary right here. It was a bit clearer on the 4 hours, kind of came back, and then we got the liquidation through the low. Exactly like we're seeing setting up in US dollar Japanese yen in the daily chart this week. Okay, so moving on to the portfolio selection this week. The Australian dollar is the #1 currency still to the upside. So even though we're kind of seeing a bit of risk off or potential risk off coming in, the Australian dollar, because of the massive rally in commodities and metals, is really still benefiting from that. And I do not want to be short the Aussie dollar going into next week. We also have the Swiss franc, which is a safe haven currency. And although it's not as strong as the Aussie here quantitatively, that would be the second currency that I would like to be involved with to the long side. And then after that, we've got the New Zealand dollar, but also the Japanese yen. Now notice how the New Zealand dollar is going this way and the Japanese yen is going this way. So we are, I'm looking to kind of get ahead of that flip from negative to positive in the quantitative data by looking for that potential third wave breakout, or to get involved before that third wave breakout, if that's what's going to materialize, which is what looks to be the case now after the failed bearish breakout, or at least bearish pattern last week. It didn't actually break out. So going into this week, the Aussie dollar, the Swiss franc, and the Japanese yen are my top 3 currencies I want to be involved with to the long side. To the short side, we still have the US dollar, which I do think could be forming a significant bottom, but I'm still looking to be short unless or until the quantitative data shifts. We also have the euro, which I want to be short, and the pound. So going into next week, we're going to be looking at Aussie dollar to the upside, which we've already looked at. We're also going to be looking at EurAusd to the downside, Pound Aussie to the downside. We're also going to be looking at Euro franc to the downside, Pound franc to the downside. We've already looked at US dollar franc to the downside. And also US dollar yen we've looked at and assessed, can we get involved in that kind of sell the rip opportunity before the breakout for a potential third wave. And also we're going to look at right now Euro yen to the downside and Pound yen to the downside. Okay, so kicking off with the Aussie pairs, starting with EurAusd. Now I'm on the 4-hour time frame, but you can see this is a short or do nothing, and it's been a short or do nothing for a while, and it just continues to make lower lows, lower highs. So what I'll be looking for next week is if we push into the sell zone, which is above the 1.69595, I would be looking to time from these 2 highs, this descending channel right here. This is where I'd be looking for a 1 or 2 day reversal back inside the range next week. And if we jump over to the multi-charts, you can see very simply, this is a rip and flip setup. So it's trending to the downside. We push into the sell zone, into a key area of resistance in this case, and into that dynamic trend line. I'm looking for that flip lower for 1 or 2 days. Next is Pound Aussie. Very, very simple. This is a rip and flip setup into the 20 period moving average. And there's a really nice prior low here. So it's a type 2 resistance area, because in the past this price point pushed price higher, which is the opposite of what I'm looking at. So it's not as strong as a type 1, which is where in the past price pushed this lower, and I'm looking for it to do the same, but it's a stair step. So this is still a decent area of confluence, and you can see we tested it here, we held, then we broke down below. So a pullback and a retest would be a nice stair step into the sell zone. I'm going to be looking for a 1 or 2 day sell off to the downside. I can only short this market or do nothing. And a quick look on the multi-charts, you can see right here is where those 3 coincide. And this is where I'm going to be looking for that pullback and a failed breakout. So we're coming back, we're retesting this, which held, broke, retests, and I'm looking for a failed breakout to the upside and then that liquidation down for 1 or 2 days. Next is Euro franc. Now this is a short or do nothing. I cannot buy this market under any circumstances. I'm on the 4-hour chart. I'd like to see it push into the sell zone and trade into these prior 4-hour highs right here at the 0.91836. This is where I'll be looking for a 1 or 2 day reversal back inside the range next week. Next is Pound franc. Now Pound franc is actually a rip and flip setup. Again, I can only short this. I cannot buy this market under any circumstances. The significant low over here is also where I'd be looking. Notice how this has tested multiple times. Look at this. Tests and holds, breaks, retests, retest, breaks, retest, breaks, tests, pushes, tests, breaks, retests. So I'm looking for a pullback and a retest of this significant low over here, the 1.06120, and I'm looking for it to fail, looking for it to fail, looking for it to fail for 1 or 2 days to the downside. And if I zoom in here, you can see this is simply a rip into the sell zone. And this is where I'm going to be looking for a 1 or 2 day sell off to the downside next week in pound franc. Now, if we quickly jump over to the multi-charts, in pound franc, there is a second technical pattern setting up here, which is a descending triangle. This descending triangle has a technical target down here at the 1.0321. So if you do break the low, and you need to break out of these patterns, if you do break the low, you can look for the pullback and you can look for the move down to the 1.0321. So there is also a potential breakout set up in pound franc to the downside, but I cannot buy this market under any circumstances. And finally, the yen pairs before we move on to gold, silver, and crude oil. You can see on the monthly time horizon, this was overbought and now it is correcting. This is going to neutralize, which means we've got most likely multiple months to the downside, if not just at least 1 or 2. And so I would be looking for a pullback into the sell zone, into the moving average, which is above the 183.51. And this is where I'd be looking to time either the next leg down or at least a 1 or 2 day reversal in euro yen. As you can see, we are reversing and we have a head and shoulders pattern here. If we look at this on the multi-charts, you can see the head and shoulders pattern is down at the 176.692. So this has quite a way to go. We're also consolidating here at the base of the pattern underneath the 4-hour moving average. So we could very easily, break out from here and you just start to get the next leg down. You could use the volatility target in Hedge Dash, which we just looked at. But I do think now we are starting a much bigger leg down. And here is the failed breakout in the weekly, which had this kind of rectangle pattern consolidating. And if we'd broken out of this, this is where we get that kind of big move to the upside. Instead of breaking the high, it fails, and we've already taken out the low. So whereas we're waiting for a potential breakdown in US dollar yen, for example, we've already had the reversal in euro yen, which is kind of showing us a glimpse into the future of those other yen pairs. So either way, I can only be short or do nothing, cannot buy euro yen next week. And finally, before we move on to crude oil, is pound yen. Now, pound yen is setting up really nicely technically. Why? Because we've got a prior stair step low, so we break through, pull back, test price support as resistance, and that literally intersects at the sell zone and right at the daily moving average. So this is going to be a fantastic place between the 211.20 and the 211.62 to try and time either a 1 or 2 day reversal. But I think if you can time that, we're probably, you could look for the swing trade down to the prior low. And if you break that prior low, now you're in also a third wave to the downside. So it could turn into a more fundamental position. So really like this setup in pound yen. If we pull back into this area, I am going to be looking for a short for sure. And if we just jump over to the multi-charts, you can see this was the failed consolidation breakout. And what happened was where this failed, look what's happened. It's turned into a triple top. Now, very often triple tops actually fail and they tend to break out to the upside. In this case, we have a genuine triple top, which is fairly rare to actually see it like this. And now we've broken through the lows and the triple top target is down here at 204.92. So it does look like we've got further downside in the yen pairs. I'm going to be focused in real time with members on trying to time that swing low or that swing high into a move lower next week. And finally, before we move on to gold and silver, is crude oil. Now, crude oil isn't doing too much. It's kind of ranging. The only thing I'm really interested in next week in crude oil is if we can break below the moving average, this will turn into a range reversal play. So I'll be looking for a move down. And again, it's an if-then process. If we can break the moving average and make our way down to the buy zone at the 59.94, I'm going to be looking for this to trade into this high, which is where we stair stepped before. So we pulled back, tested and rallied. I'm going to be looking for the same thing. So a push into the 58.88. This will set up a potential bounce for 1 or 2 days to the upside, and that becomes a range reversal play as this starts to range kind of between these levels and the moving averages in the middle. So that's the specific setup I'm going to be looking for in crude oil. Very good chance I don't trade crude oil, but if this happens next week, then there is a good chance I will take a long opportunity in crude oil next week. Okay, so wrapping up the video with gold and silver, starting with gold. Now, because we had the rallies and then we got the kind of top or the blow off top, they're both now kind of going into a ranging mode. But unlike Forex, you still don't want to really look for mean reversion stuff. You can play the range, but you kind of want to do it with breakouts. So the range in gold is between the 5098.65. I highlighted these levels last week for you, and we tested the range high and we failed. Now we've got this trend line between the range high and the range low, and it's sitting right at this trend line. So gold would really be best looked at as a kind of if-then process as well. If you break above the 5098 and you clear it, it should clear, you know, with momentum. Then you can look for, this would turn into an ascending triangle pattern. You can look for the pullback, the retest, and the move away, you know, in this case towards the prior high. But equally, you can also look to the downside if the trend line fails. So if you get the failure down here, again, in both scenarios, the moving average should follow it, and you can kind of time your bear flag or your bull flag from there. But in this scenario, I would look for the bottom of the range at the 4402.72. So looking to play the range because it's busted, but, you know, doing so in a way that you wait for the breakout first because it's a volatile asset class. And finally, we have silver. Now, I think on balance, I would prefer to trade silver to the upside. We have a really nice bullish wick off of the moving average, and we close back inside the prior weekly candle up here. So it does suggest further upside potentially this week. We have an inverse head and shoulders pattern forming. And so what I'd be looking for here is, because we also have a range high up here, so here's the range low, here's the range high, you can look for the inverse head and shoulders break during the week. Moving average should follow it, and especially if it comes back and settles on the other side of the trend line, that sets up your move into the range high. And you could look also at potentially booking profits at the daily moving average, which is the 90.82. So that's what I'd be looking for in gold and silver. You know, a little bit more difficult to time because they are going into a ranging market. But those are the two things I'd be primarily watching out for in both gold and silver next week. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT trading room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge Hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge Hedge platform is included with every GMT membership.